Hello, my name is Evan, and thank you for watching Evanomics 101, your number one source for everything economics. The U.S. just grew 2% in the first quarter of 2026, and at first glance, that sounds pretty solid. But here's the problem. That number might not be telling the entire story, because underneath the headlines, there are warning signs starting to build or that have been building. In today's video, we're going to break down what 2% GDP growth really means, what's actually driving the economy right now, and whether or not we're heading toward a slowdown, or is this an economic boom or the start of an economic boom. Before we dive into the video, I do have a quick favor. If you enjoy clear, no hype breakdowns of the economy, supporting the channel with a like and a subscribe really helps more than you think. Let's go ahead and get into it. Let's start with the headline. The U.S. economy grew at an annualized rate of 2% from January through March 2026. Now, historically, 2% is all right. It's not recession territory, but it's also not strong growth. For context, a strong economy usually grows around that 3% or more mark. Below 2%, you kind of start raising some concerns. So right now, it kind of puts us in a not bad but not great kind of area, okay? But here's where it gets interesting, okay? The thing that's really interesting about this is that not all GDP growth is necessarily created equally, okay? This quarter, a big chunk of the growth came from government spending and investment, and a buildup of inventory. And that's important because those aren't always sustainable. What you want to see is strong consumer spending when we relate it to GDP. Also, you want to see good or strong business investment. But early data suggests that those two areas are also starting to cool off, which brings us to the biggest driver of the U.S. economy, and that's consumer spending. And I'm going to talk a little bit about where we are as an economy with the consumer spending. So consumer spending makes up about 70% of the U.S. economy, and in Q1 2026, it grew but slower than expected. Now, why is this? The reason for the slow growth, because consumers are feeling the pressure from things like your higher than normal interest rates over the last couple of years, persistent inflation that doesn't seem to go away or come down to the Fed's target of 2%, as well as rising debt levels, okay? You also got your credit card balances that are near record highs, and saving rates continue to drop. So while people are still spending, they're starting to pull back just a little bit, all right? And a little pullback or a little slowdown, it matters a whole lot when we relate it to the overall economy, okay? Right now, I'm gonna jump into inflation and CPI, excuse me. Talk a little bit about how inflation relates to all of this. So inflation has cooled compared to its peak, but it's still around. It's nowhere near where the Federal Reserve wants it to be. The Fed's target is a 2% inflation rate, but CPI is still hovering above that level, which creates a problem for the Fed, okay? The economy is slowing, but inflation isn't fully under control. That's what economists call somewhat of a tight spot, okay? Because it limits what the Fed can do next as far as using its tool of interest rates to fight inflation, okay? I'm gonna switch it and talk a little bit more about the Fed right now. What does all this mean for the Fed? Right now, the Fed is watching for pretty much two things: slowing growth and persistent inflation, okay? If growth slows too much, okay, they may cut rates. If inflation stays high, they may hold rates where they're at. So we're in this weird kind of middle ground right now, where the Federal Reserve is likely to do what they just did: pause, okay? Wait for more data to see exactly where we are before they decide to lower rates. I don't think we're going to see a rate increase. I definitely think with the new Fed chair, we will be seeing some rate cuts eventually, but maybe not as soon as people think, okay? Quick pause. If you want more simple breakdowns like this that actually make sense of the economy, make sure you're subscribed. Most people hear numbers like 2% GDP and just move on. But understanding what's behind that 2%, that's where the real advantage is. All right, let's hop back into things. So how are investors or markets reacting? Okay, markets are being cautious. Markets are cautious. Okay, a 2% growth rate suggests no immediate recession, but possible weaker future earnings. Okay, so that's kind of why we've been seeing it plays a part into the volatility that we've been seeing in the stock market. The increased focus on the Fed policy to see exactly what they do next, and more so defensive investing. Investors are basically asking, is this a soft landing or the start of something worse? All right. So what you can expect to see next or happen next? Where do we pretty much go from here? Okay. There are really just two paths that you are more than likely going to see. The scenario one is your soft landing. If we happen to see a soft landing, pretty much what we'll get with that is your growth stabilizes, inflation will slowly start to come down a little bit. The Feds will cut rates, but it'll probably be later on. The second scenario is a complete slowdown. Consumers pull back even more. Your job market weakens even more, and growth will start to dip below that 2%. Right now, we're right in the middle of it. We're right in between everything. So even though that 2%, we got that 2% growth, that all that says is, we're doing okay for now. So yes, the U.S. economy is growing at 2%, and that sounds fine on the surface. But when we actually take a deeper look into it, it tells us it's a much more complicated story than that. And that's what I want my viewers to realize and understand. And I want to hear from you. Do you think the economy is stabilizing or starting to slow down? If you get value from this, please hit the like button, subscribe, and drop your take in the comments. I read every single comments. I know it's not a lot of them, so I don't have a lot to read, but I appreciate your comments. And if you want more clear, no nonsense breakdowns of the economy every week, you already know what to do. Please like, subscribe, and share. And this is Evanomics, and I will see you on the next video. Thank you.